Hi, this is John Okoro. Welcome to this week's Auspicious Blockchain video blog. This week we're going to take a look at why Bitcoin's price is rising. And oh, is it rising? It's all over $50,000 again and still going up. So, first off, this is not financial advice. This is just my opinion and giving you some points as to some things that are happening in the market. But please do seek your own financial advice and professional financial advice as needed as you make your own decisions about finances. So again, not financial advice, just my opinion. Let's take a look now at what we call the stock to flow chart. You can find this at digitalk.net on Bitcoin stock to flow if you search for it. And basically, this is a chart that takes a look at from 2009 until today and into the future what the price of Bitcoin should be based on the amount of Bitcoin in circulation and how long it takes to mine Bitcoin. And this is compared to something like gold, which also has a limited supply that you can mine and a certain amount you can get each year. And according to the pricing, you can see that we're sitting someplace between basically 30, 40,000 going up to about $100,000 according to the chart, which is obviously not a magic prediction, but we'll look at the formula. And in about the next 3 to 4 years, it predicts that Bitcoin's price will go up to about $1 million. So that's pretty high. The last Bitcoin, by the way, will be mined in 2140. Okay? So if we look at the formula that is used here, the basic stock to flow formula is the stock, which is the amount of Bitcoin, the amount that there ever be is 21 million, and then to the flow, which is how much Bitcoin is going to be mined in each year. And so we divide those, and that gives us currently a stock to flow for Bitcoin of 52. And in 2024, there's going to be something called a halving, we'll talk about in a moment, and that stock to flow is going to go to 113. Now, for comparison, gold stock to flow is 62. The higher the stock to flow, the higher the price should be. Now, currently, Bitcoin is at $51,000 roughly, and gold is currently at roughly $1,700. So Bitcoin is much higher, and gold does not have these halvings, right? So halving means that in 2024, we're going to only see 450 Bitcoins should be a day instead of 900 Bitcoin per day. So you're going to get half the reward, and that's going to keep on halving up until 2140, right? Where gold, you can keep on mining it, and we shouldn't be having the supplies of gold. So you can see that Bitcoin is a digital valuable asset, and it's getting more and more valuable. Now, another reason that it's getting valuable is because of a potential financial or debt reset. And the idea here is that there's a move to digital currencies, whether it's China moving to a digital yuan, whether it's a lot of companies like Facebook who are moving to digital currencies, or Tesla, MicroStrategy buying Bitcoin, or the city of Miami. A lot of people and countries and cities are moving and shifting to digital assets. There was an announcement, kind of tongue-in-cheek, of Kenya moving to Bitcoin. I don't know if that was actually real, but what we're seeing is a big shift to these digital assets. And what is happening is the interest rates in banks is effectively zero or negative. So while you can actually, and we'll see in a moment, make money on your Bitcoin and your cryptocurrencies, that's not the case really for traditional fiat dollars anymore and fiat money. So let's look at dollar cost averaging now. Dollar cost averaging, you can see that's like a roller coaster ride going up and down, up and down. That's true if you've been in the Bitcoin market or cryptocurrency, you know that. Let's see how dollar cost averaging works. If you buy some Bitcoin at $1,000 and later the price goes to $10,000, you buy some there, you don't want to get all that volatility. So what you do is every week or every month you buy a little bit of Bitcoin. And when you buy a little bit of Bitcoin at each one of those points, you get an average price of roughly $5,500 for simplicity's sake. So it allows you to remove some of the volatility by just buying the same amount every week or every month. And that makes you less exposed to volatility of price. And there is volatility. Now, altcoins are something else you can look at if you are like, you know what? $50,000 is a lot of money for one Bitcoin, even though you can buy a fraction of a Bitcoin, by the way. It's called a Satoshi, or a small amount. But you can buy altcoins, which are alternative coins to Bitcoin, because they're not Bitcoin, like Ethereum or Monero or Litecoin or Ripple or Chainlink. You can see in the table to the right there that these coins are much cheaper, right? So you could buy Chainlink under $30 at the moment. You could buy Cardano a little over $1. You could buy Stellar for around 40 cents. right? So you could buy whole coins or multiple whole coins, and these still go up generally with Bitcoin. As the Bitcoin goes up, the whole market generally goes up. Some of these actually go up faster than Bitcoin, even though there's no guarantee of that. So this is a way that you can still invest in digital assets and cryptocurrencies, even if you're not able to buy a whole Bitcoin. Okay. Now, another way that you can make money with your Bitcoin once you bought it or your altcoins is staking. So there is staking for Cardano, Tezos, Neo, I believe Ethereum. These are all altcoins, right? And that's basically like getting money in your bank account, where we used to get interest in our bank account, which we really don't get any interest anymore, but you can get it with cryptocurrency. So for Tezos, you can do an Exodus wallet, also Neo and Cardano in Exodus wallet. They have staking. You can also use, I think, Ethereum. You can do on Coinbase, I believe. And there's also BlockFi and a lot of other platforms. They call them DeFi, decentralized finance platforms, that will give you basically interest for your crypto without having to sell it. So 7%, 5%, 4%, 2%, which is a whole lot better than zero or negative, right? So this is a great way that you can also earn some money with the crypto once you buy it or your Bitcoin and not having to sell it. So lots of ways to make money. The markets have been going up around 700% since last year for Bitcoin alone. So a lot of potential upside. Obviously, there's no guarantees, and that's important to keep in mind. And again, not financial advice. So thanks to Vecteezy and openclipart.org for some of the images we use in the video today. If you like the video, to support, please subscribe, like, and share the videos. Whether on YouTube or Library TV or other social media. You can also support us on Patreon, Amazon, with Bitcoin and cryptocurrency, and using the Brave browser as well. And you can see more referral links in the comments below. So as always, stay agile, and thanks for listening.